Hello everyone, welcome to another video. This is also a very highly requested one, trading news events. So before we begin, you should know what news events are actually tradable. Now we all know that we have CPI, we have PPI, we have NFP, we have unemployment claims. These are news which are pretty commonly occurring. You'll see that CPI always comes out on during the second week, mostly on Tuesdays, the second week of a new month, right? So, for example, January just started. On the second week of January, most likely on Tuesday, you're going to get a CPI event. A PPI event you get during the second week as well, but it's not as important as a CPI is. As for NFP, you are going to get NFP on the first Friday of any month. So, for example, February just started, and the first Friday of February, you're going to have NFP. Unemployment claims comes out every week on Thursdays, no matter what. Every week, Thursdays. And then you have other news events as well. Now, uh, these are the news events that occur at 8:30 a.m. New York time. So all of these news events occur at the same time. And when I say other news events, I mean news events like Joel's Jobs or services indexes or goods and all of that, those other news. But we're primarily going to be focusing on these four news. Right. So let's actually understand how news events basically uh, push price, how they move price. Now, news events, they do two things. Either they manipulate or they distribute towards the intended target. So, in what case is news actually going to manipulate? Let's actually come to this diagram right here. You can see that we are in a general downtrend. And you can see on this day, for example, this is a CPI. So this was Monday. You can see it creates a low. You can see on Tuesday, price is moving up higher, and CPI comes out once price is trading below Monday high. You can see price hasn't really manipulated any old swing high yet. So what price ends up doing is it goes up above this high, so Monday high, which is going to be your previous day high, and that's where price reverses from to the downside, where you can take your entry. So that is the first case where a manipulation hasn't already occurred uh, before a news release, a high impact one. This is a case where a manipulation has already occurred. So you can see here, this is going to be your Monday high. On Tuesday, price comes all the way up, takes out Monday highs, and starts to reverse from there. That's when you get your news event, and news ends up pushing price lower. Let's actually analyze this on an actual chart. So this is Euro USD from this week. We had a couple of news events. Let's actually focus on the news event that occurred right around here. So what happened here? You can see this was Thursday. So Thursday, 8:30 a.m. You end up getting unemployment claims, like we just discussed. Every week, 8:30 a.m. You get unemployment claims. You can see that price does trade up higher, but it does not really take out any swing point, right? So price just creates this swing high, then it gives you a move lower. Price ends up going all the way back up again, sweeps this high out. So you can see this high that price created. It takes that out, and then it moves down lower. Now, in a case like this, you can see obviously there was no old swing point that was taken out. So price came back up above, took these highs out, and then it expanded lower, you can see. Then of course price ends up going back up again, takes us high out, then expands lower again. But you could have easily caught this move lower. Let's actually come towards Friday. So on Friday, you had PPI. So this was Producer Price Index News. Now you can see that 8:30 a.m. is about round about here, right? And you can clearly see that price trades up above this high, takes it out, reverses, and you get your news release here, and that ends up pushing price all the way down. So you can see this is a very perfect example of that actually occurring. This wasn't that clean of an example, but it does show you that price did not take out any high before the news release, so it took it out afterwards. Let's actually go back and try to look at other news releases. So to do that, I'm going to just go on to Forex Factory. I'm going to go back 2 weeks. So I'm going to go back to January 18th till January 24th, and let's actually look for a news event. So let's try watching out for January 22nd, unemployment claims, and final GDP. Let's go to January 22nd. All right, and you can see where do we get our 8:30 a.m. news. It's going to be hmm, yeah, I'm too far ahead. I'm too far ahead. It is going to be right here, right? So you can see before the news release, you do get sort of a manipulation of this low, right? So you can see this is Wednesday lows. They get taken out, and that's where price reverses from to the upside. You can see price is moving up higher, and as soon as the news releases, price just starts to continues to move up higher towards its target. Why this happened was because you already had this manipulation earlier. So once news came out, it pushed price higher. Now let's watch out for some Friday news. So we had flash manufacturing PMI. Let's watch out for this one. Now this isn't very that high of an impact, but let's still try to watch out for this. So this comes out at 8:30 as well, I believe. It comes out at 8:45. So let's watch out for that. That's going to be here, right? So you can see uh, you had a manipulation of this low, and you also had SMT forming right here. You can see you had an SMT here because DXY took this high out, but Euro did not, so you have an SMT here as well. And you can see once news breaks out, price just moves to the upside. Why it does this is because you already had a manipulation of this low and this low. you just had SMT here with euro. So if you pivot towards DXY, you will see that price did take the slow out. Let's go back even further. Let's go back to January 11th till January 17th, and let's try to watch out for unemployment claims once again. So January 15th, 6:30 p.m. or 8:30 a.m. unemployment claims. So it's going to be 15th. Let's go back to 15th of January. This is 15th January. Yeah. All right. So you see here, this is 15th January. News comes out at 8:30, which is going to be here, and you can see that right before price does that, it takes these highs out, right? So you can see price manipulates these highs. It also manipulates this high once again before price actually reverses, and price reverses, and this is where you get your news release on this particular candle. So this is 8:30 a.m. and you can see price. It pushes price lower into your high time frame objective, which was here. See, this was a daily key level. So your high time frame objective was achieved. All right, let's look at January 13th CPI. Right, so let's look at what happened on January 13th CPI event. So let's look at this. Right, so you can see price was pretty bearish. It was moving down lower. You can see here price gives you pretty clean manipulation as well. And now it's moving down lower. And on the 13th of January, that was the second week, and the Tuesday of second week of the first month of the year, you can see you have CPI. So this is 8:30. You can see you don't really have any manipulation of any high before news comes out. So you can see before news, price was just moving down lower. As soon as a news comes out, price goes up higher, takes this high out, and then it moves down lower. Okay. So in order to be able to trade news, you should be able to identify what price is doing prior to news. Right? Now, a lot of you guys would have this question that price did, in fact, run all of these highs before. So why did it not come downward? I have a pretty reasonable answer for this, and I'm going to show you what that is. So let's turn on the session indicator, and you can see that the reason why price pushes up higher is because there was this pool of liquidity, or this swing high wasn't as significant as this one, because this was London highs, right? So this is London session highs formed at 5 a.m. and you can see price comes back up into these highs and then moves down lower. So this swing high had more, I'd say, significance than this one. This was just a random swing point formed during late night. So you can see at 2 p.m. this was formed at a very irregular time. So this doesn't really uh, this isn't really a high resistance swing point. This is because this is London highs, right? So you also want to match up session profiling with this in order to really understand all of it in a better way, right? So this is something that you will understand when experience. This isn't something that you can really just learn and just implement into your training and you're expected to play out every single time. It is something that you should experience and experience. I mean, experience is the best teacher of it all. Anyways, I know this was a short one, but it was a very highly requested video. If you want more, make sure to subscribe and like this video to show your support. If you have any other ideas, any other videos that I should make, do let me know down in the comments. Until then, take care and have a good rest of your day.